With the recovery of the Eurozone still yet to be seen, the attention is on European policymakers to implement plans that will offer solution. One attempt at this is a gathering of 20 policymakers in Moscow to discuss whether monetary policy generosity will affect the economic reforms that are needed to improve global economic growth. And joining us now live from London is Joe Rundle. He's head of trading at ETX Capital. Joe, thanks so much for joining us this afternoon. Just reading off some commentary that's come through on this end with the road ahead looking a bit smoother. G20 finance ministers will be happy to ignore the wreck in their rearview mirror when they meet this week to steer the course for the world economy. Just where are your confidence levels sitting at this stage of the game?
Well, I think there is a lot of confidence, and that's why we've seen this big risk-on move that we've seen over the past couple of months. However, we're seeing a little bit of caution. The European problems haven't been solved, and they're still inherent in the Eurozone. So I think that the Eurozone really needs some form of defining event so they can move on, because otherwise they're just kicking the can down the road from one sort of crisis to the next, using sticky tape to sort of just mend it in a short-term fashion.
Joe, Lindsay in Cape Town. The big game in town recently has been the euro-yen. Euro-yen, I think a couple of days ago, going to 127, its best level for a couple of years actually. It's currently just below 125. Two reasons for that. So optimism, I think, in the Eurozone. A lot of money has gone into the peripheral Eurozone over the last year or so, very quietly, and it's suddenly been revealed. So everyone a little bit optimistic. And also the debasement of the currency, the Japanese currency, by the Japanese themselves. This is a full-blown currency war as far as I'm concerned.
Yeah, it is. It's everyone wants a really weak currency at the moment, and I think we're going to see the Eurozone finance ministers meeting today, and they're probably going to come out with some form of trying to talk the euro down. I'm not sure what they can do though. I mean, they've got they can cut interest rates to zero. It's not really going to make a tremendous amount of difference, and they can start talking down the euro, but that is just talk. And so I think we are going to see everyone wanting a weak currency. I'm not quite sure which one is going to be the weakest. I think that the Eurozone has got inherent problems, and so those will come to head and the euro will weaken over the next couple of months.
Of course, we've had fierce criticism being leveraged towards Japan specifically, with regards to the action they've taken to weaken their currency. How much of a threat do you see these currency wars posing to the economic recovery picture and the road ahead, Joe?
Well, I don't think that any central bank's really been tremendously successful in getting their currency weak when they want to. It's very difficult to bet against the market. I think the Eurozone, the euro will weaken, but not in the terms that the finance ministers want. I think it will weaken because the outlook for the Eurozone will deteriorate quite sharply in the coming months when people see that the problem hasn't been solved. So they probably, the finance ministers will get their way with a weak euro, but not for the reasons they want. So I think it's difficult to be a central banker and try and get that currency down.
I spoke to somebody, or rather Alicia spoke to somebody on CNBC Africa this morning, Joe, and he was talking about the equity market, if we can briefly switch asset classes for now, and he said that everything just seems a little bit too rosy. Here we have this massive double top on the Dow Jones and sort of a sloping double top on the S&P if you look at technicals. And a lot of people saying, the fact that the barmaid down your local is telling you to get into equities at the moment means that there's something amiss. I just wonder what the trigger might be. Should there be the correction, the healthy correction that some people think the markets might need? Is it the oil price close to $119 a barrel? Will it be an earnings shock? Will it be another sort of war between Japan and China? Will it be interest rates rising, QE being turned off? What are your thoughts?
I do think there is going to be a correction. I think that the trigger is going to be twofold. It's going to be destabilisation of European politics. By that I mean the Italian election, the Spanish government becoming a little bit weak, and I think conceivably you could see a very quick switch around in governments from Spain, Italy and Greece in a very short period, and that coupled with the US debt ceiling and sort of fiscal cliff too. They only delayed it a little bit, coming back into play, and I think that's just going to cause a quite healthy and maybe a little bit more aggressive sell-off in equities, and probably seeing a raising of all the gains we've seen in December, January.
Joe, on the flip side of that then, I mean, what do we need to see in terms of catalysts to get things sustainably going now? What would you like to see emerge from the G20 meeting of finance ministers specifically?
Well, I think we need growth. The world economy needs growth, especially the Eurozone, which has been bumping along at nothing for a long period of time. Now, realistically, that growth is not going to come from demand within the Eurozone. It's going to come from external. It's probably China and emerging markets. And interestingly, I think the US economy is a lot stronger than people think. I think the real catalyst in the US is going to be the housing market correction, which I think will pick up pace in the latter half of this year. I think it was key that Jamie Dimon came on back in November and said the US housing market is seeing a recovery. Now, he's in a very privileged position to see huge amount of data and control a lot of mortgages. So I think the US housing market is going to push consumer confidence in the US, and they will start a really healthy growth, but it won't happen until the new spending cuts and debt ceiling are resolved.
A lot has been made, Joe, about the differing performances of the macroeconomy and the market economy. In other words, the macroeconomy, more or less across the board, taking out a few emerging market countries, has been insipid, and yet the markets have carried on in their bullish fashion, mainly due to liquidity and momentum and some fairly decent earnings. Now we're sort of seeing a stabilisation of that situation, but what it almost tells me is that markets may have run a little bit too far, and the macroeconomy has probably now stabilised. So the two might sort of converge a little bit. Do you think that might be a theme in 2013? In other words, macroeconomics not doing any worse than they've ever done and starting to creep higher, and markets starting to sober up a bit?
I mean, the interesting thing between this sort of Eurozone crisis and 2008 credit crisis is this is a sovereign problem. Companies have deleveraged and spent the last 2-3 years deleveraging and have got really healthy balance sheets. What worries me a lot is the fact that there's a lot of cash sitting there, and a lot of CEOs not sure what to do with that cash, whether there should be a second round of consolidation. So they're sitting there very healthy, but it seems to be consumer confidence. Certainly in the UK, people think they should be stopping spending because of the headlines you're seeing about the macro economy, and it's sort of self-fulfilling, especially on the retail side. So people are stopping spending, and it could, my big worry is it could translate into the company earnings next year, and so we're going to see a deterioration in those company earnings just as the macro economy is beginning to pick up.
With that, we've had the growth baton being passed on to China. China at this stage, the biggest trader in the world, judged by imports and exports. The role you see China playing in this global economy moving forward, Joe?
I think China's key. It's got all the power. It will shift round from being less of a manufacturer to more of an importer, and it's going to be interesting as to which parts of the world will benefit from that as the global sort of balance changes. I think, interestingly, that the US has access to this huge amount of cheap energy, and this could be the second catalyst that will make it a cheap producer and could become an exporter to China because of the cost of production is cheaper in the US with high energy industry.